Not sure where to start with the home saving process before you even get started with the home shopping? Then stick around as we get into that and the question of the day. What's going on, guys? Matt in the hat, Matt Johnson Real Estate, powered by Keller Williams Diamond Partners. You are tuned in to the hot list. I come to you on Monday through Friday around 12 o'clock Central Standard Time. We hang out and talk real estate. We talk properties new to the market with recent price reductions or something unique about the property that I want to share with y'all and want y'all to know. I also answer a question of the day that is submitted by a listener of the podcast and find out how you get your question answered on air. Just hang out with me till the end and I will get that for you. Finally, I recognize and thank a sponsor of the week each and every single week. If you're interested about becoming a sponsor of the week and sporting the hot list, hang out with me for a few and I will get you that info. So thank you guys so much for joining in on this Red Friday. To all of my fellow veterans who have served and currently serving, thank you guys so much. I appreciate what you do, having done it myself. So the property we are talking about today is a fairly unique property. It's a newly listed property. The address is 16791 South Stanley Road in Overbrook. So it is a few miles north of Emporia. It's a 4-bed, 1-bath farmhouse. It's got just over 1,100 square feet of finished space, listed for $99,500, courtesy of Coldwell Banker American Home. So this is like I said, it's a farmhouse, 1.5 story. It does have 10 acres of land that comes with the property, and they have partially remodeled the house. It does need some new windows, new siding. It does have a tornado shelter in it as well. It's got a barn as well as some outbuildings, 2 silos, and a pond. So click on the link in the description. That's going to take you right to my website so you can see the property for yourself and take a look at it. If you have any questions, please feel free to reach out to me while you're on my website, or you could jump back here to Facebook and I would be happy to answer any questions I can for you. If you're interested in the property and a pre-approved buyer, not currently working with another agent, I would be happy to set up a time to go look at it. If you have any questions, like I said, please feel free to reach out. Before I get to the question of the day, I do want to recognize and thank our sponsor of the week this week, and that is Brock Sheldon, who is a loan officer with Assurance Financial. We've talked about some of what he does, what he offers. I have included a link in the description that's going to take you right to Brock's Facebook page. This is the best place to see what information that he puts out. He does put out a few things a couple times a week. It's got his contact information on there, his phone number, email, as well as his website, all conveniently located on the Facebook page. And he recently came up with a way to truly thank educators and teachers here in Kansas. And if you are an educator, faculty of Kansas schools, then reach out to Brock, talk to him about what he can do to help you save for some money on either the purchase of a home or even a refinance as well. So make sure that you reach out to Brock. His phone number is 620-757-6436. If you're not looking to purchase a home, looking at refinancing, he has a ton of information right now that is available to talk to you about the refinancing process, what that looks like, and is happy to guide you through that. A few of his posts this week have included information about refinancing, as well as what you can do to work on your credit score before the spring season hits and people really are just running and gunning to get some houses. So make sure you take a few minutes, click on the link in the description to Brock's page. You're not going to want to miss out on the information that he has and that he distributes on a weekly basis. You guys definitely need to check it out and reach out to him. If you're curious about becoming a sponsor of the week, all you have to do is shoot me a message, whether it's here on Facebook or YouTube, or you can drop it in the comments. I'd be happy to reach out, have a little bit more in-depth conversation about what it takes to become a sponsor of the week and support the hot list and get recognized and spread all over Facebook, YouTube, LinkedIn, iTunes, Spotify, and Amazon Music. So if you guys have any questions, please don't hesitate and reach out to me. All right, so that brings us to my favorite part of the show, and that is the question of the day. The question of the day is submitted by a listener of the podcast. So each and every day I answer a question. It is submitted by a listener of the podcast. So everybody who has submitted a question, thank you guys so much. Make sure you keep those coming, because I can't continue to do the show and come up with the content without you. If you have that question, there is a high chance somebody else has that question as well. If you're not sure where to start, I would be happy to be your real estate resource and answer your question about real estate. If it's something that I'm not familiar with or don't know right off the top of my head, I do have people I can reach out to, speak with about your question, and get some more information from there. So make sure you guys keep those questions coming, and we're going to get into the question of the day. How do I start saving for the home buying process? First and foremost, let me say congrats on your decision to buy a home, and this decision is not made lightly. So congrats, pat yourself on the back, and good luck. So since you're thinking about it and you know that you need to start saving, even though you may have a 401k that you could potentially borrow from for a down payment, there are going to be other costs like your inspections, your appraisal, your closing costs. Plus, there might be some type of unexpected repair once you move into the house as well. Now, this shouldn't be all doom and gloom. That's not what the home buying process is about. Now, it's really easier to save more than ever with the technology and with everything that's available to buyers and sellers. Now, I'm sure many people are going to tell you, especially parents and family members, that you have to just buckle down and sacrifice for so many months or so many years to save up. And it's been my experience that's not always the case. This is similar to weight loss, that you sacrifice, and that's why diets typically don't work, because with diets, you're always hungry, you're always starving yourself, and you just binge once. Well, after you binge once, then it's easier to do again and again and again. And that's why this saving and sacrificing to save doesn't always work. And there are easier ways to do it that you may not notice, or you could even trick yourself into saving more. So what we are going to cover today are going to be 7 tips to fill that home buying piggy bank. Number 1, budgeting. No doubt that you're familiar with this, whether it's Dave Ramsey or Susie Orman. Everybody's heard of them. While they have great information, they only explain how to live within your means, not grow yourself financially. That's an entirely different topic and podcast. I'm just going to leave it at that. So with budgeting, what you want to do is write down how much you're currently spending. You want to write down your rent, your utilities, food, entertainment, insurance. Whatever you're spending, write it down. Also keep in mind that no one gets this right or sticks to a budget because they lie to themselves. So if you want to spend less on, you say you want to spend less on eating out, but do you really? Do you really want to spend less? Most people, in fact, don't. Whatever it is that you say you want to give up, you're not going to give it up. I didn't either. So, for example, we'll use that, we'll call it air quotes, liar budget and break down expenses. So your fixed expenses are going to be items like rent, utilities, and insurance. They're generally about the same each and every month. For the non-fixed expenses, you're going to have entertainment, eating out, new clothes, hobbies. These ones you're going to have more control over than your fixed expenses. And this is really where you're going to make a difference in your budget and saving long term, because you're not just talking 6 to 8 weeks of saving, you're talking about several months of savings, if not years, depending on where you're wanting to go and where you're wanting to move. When you write all of this down, say you want to stop meeting up with friends on Friday, or you're not going to buy so many new clothes for let's say 6 months. The truth is that's fairly unrealistic, because we live in an instant gratification world and you truly don't want to deprive yourself. Instead of saying you're going to stop all of this and stop all the spending for 6 months, reduce your spending instead of cutting it out altogether. So just reducing it by as little as 10 to 15% can really make a difference, because you're going to get into items like shopping on clearance racks, maybe splitting or sharing meals with your significant other, or ordering one less beer. And all of that is going to add up. Number 2, auto savings accounts. Banks really have this figured out, because they figured out that it's easier to trick their customers into saving instead of asking them. For example, there are banks out there that will round up to the nearest dollar when you make a purchase with your debit card, and that round up amount goes into a savings account. It doesn't sound like much, but you're putting it out of mind. And think about this, and I guarantee nobody can really answer this off the top of their head. How many times do you swipe your debit card each month? If you can answer that right off the top of your head, drop it in the comment now. I would love to, because I personally cannot count how many times a month I swipe my debit card. There are some apps lately that do a great job of helping people move that money out of sight and out of mind. The 2 apps that come to mind are Stash and Acorn. These move small amounts from your checking from those debit card purchases to these apps, and they leave the money there. Now, investment accounts like these do have some type of risk, but there's less chance that it's going to be spent in an app like Acorn versus your checking account. Number 3 is going to be a hot button for a lot of y'all: subscriptions. How many subscriptions do you have? When's the last time you actually looked? Netflix, $13.99. Prime, $12.99. Hulu, $6.99. Disney Plus, $12.99. Do I need to keep going, or are y'all getting the point? All of these come out automatically. You don't have to think twice about it. So this is a great place to start looking through your expenses for potential savings. So hopefully you already did step 1 and wrote down your budget. If you already know how many subscriptions and memberships you have, how many do you actually use? For example, you log into Hulu because you watched a show that's now discontinued. Great. Unsubscribe and stash that $7 each month in a savings account or Acorn, Stash, whatever you use. It's amazing how many subscriptions we hold onto out of habit or because we don't think to cancel them. Number 4, download apps for stores. Outside of the actual handiness for locating items in a store, especially now, downloading apps for retailers that you frequent is a great way to not just find the location of items, but they also a lot of times give you access to digital coupons. And when you're scrolling through your coupon list as well as your grocery list, You can load them onto the membership card or scan items as you go through the store. These digital coupons also help plan your shopping. And because they're planning your shopping, you're going to cut down on your grocery bill, which is only going to help increase and live within your budget, as well as contribute to that house account. Not to mention that some of these retailers now have gas savings too, so you're going to be saving on your fuel. Number 5 is refinancing. Not sure where to start with refinancing. Make sure that you talk to our sponsor of the week this week, and that again is Brock Sheldon with Assurance Mortgage, and he's a loan officer there, so you could talk with him. He puts out a lot of great information about refinancing with the rates. So before I get too deep into this refinancing, if you are at a point you're closing in the near future, don't do anything that might touch your credit. This is only for those who are not currently talking with a loan officer. Whether it's a car loan with a high rate, student loan that you never consolidated, refinancing might be a good option. The benefit is you're looking for a lower rate with longer terms, which equals a smaller payment. Before you sign on the line that is dotted, this has to make sense for you first. Once it does, if it does, drop that extra money into a savings account for your home, and this is only going to move you forward quicker towards your savings goal and your home goal. Just as a quick reminder, there could be the potential that you're going to pay more in the long term because of additional fees and interest along the way. I just need to throw that caveat in there so people don't get upset and come after me. Number 6 on the list, start paying yourself. We all want extra breathing room after our Cabela's card is paid off. I get it. I understand. Instead of spending that money elsewhere, why don't you pay yourself in the savings account? You could also pay extra on other debt to help that get paid off quicker. But if you've made it this far and it's already in your budget, this is something to consider at least until you close on your home. And finally, number 7, maintenance. What do you spend maintaining your stuff? What do I mean by stuff? I mean hobbies and interests. Does it need its own budget? And really and truly think about this. Hobbies and belongings require considerable upkeep. If you're not using it anymore or not enjoying it like you used to, sell it, part ways with it, and move on. One of the biggest ones that I have seen with this has been aquariums. All the food and filters and equipment add up over time. Getting rid of this might save you in 2 ways. First way is that money that you're spending on fish food, you can divert that money into your house account. Second way is you don't have to figure out how you're going to move that big ass aquarium, because I've seen people with 30, 50, 100 gallon aquariums. I'm not helping you move it. I will tell you that right now. I appreciate you choosing me as an agent. I will not help you move that big ass aquarium. This also applies for people with projects like project cars and motorcycles. Turn old hobbies into cash by selling them. Stop funneling money into those and start funneling it into your house account. So that's it. That is going to wrap it up for me on the hot list with the 7 ways to fill your home buying piggy bank. Again, first one was budgeting. We all know what it is, and it's just a matter of knowing what you spend and turning that into a financial plan so that you can continue to live within your means while still saving for your dream home. Number 2, auto savings accounts like some banks have. You can download Stash or Acorn. The roundup dollar that they do a lot of times will go into an account like that. And as many times as we all swipe our debit cards, that shit adds up. Number 3 was subscriptions. When's the last time you looked? If you wrote your budget down like you were supposed to in step 1 for any type of subscriptions or memberships, you know what's there, you know what you're using, and I guarantee you also know the last time you used it. Cancel them, get rid of them, funnel that money into your house account. Number 4, downloading apps for stores for certain retailers. A lot of times they have digital coupons, helps you stay on point while you're grocery shopping, and some of those retailers can turn into fuel points as well. Number 5 was refinancing, helping you find a lower rate, maybe a little bit longer term, to make smaller payments, and then you can take the money that you were paying because you're used to it, pay it off sooner, or take the difference and funnel that into your house account as well. Number 6, start paying yourself. Kind of like I just mentioned in step 5, once you've got some extra breathing room, start paying that money that you were paying to your Cabela's card, your Amazon card, whatever it is, start paying that into a house account and just paying yourself to save each and every month. And finally, number 7, maintenance. Maintenance items like hobbies and belongings do require some upkeep along the way. If you're not using it anymore or not enjoying it anymore, just get rid of it, part ways with it, and you're not going to be spending that money on that yearly maintenance, or could be monthly maintenance. Who knows? So that is going to wrap it up for me at the hot list. Thank you guys so much for listening. Again, I'm your host, Matt Johnson with Keller Williams Realty. I do this because your experience matters and should be trusted with a veteran. Y'all have a phenomenal weekend, and I'll see you back in here on Monday. Take care.